This is Craig Haugard with your Financial Issues Ag Update for June 9th. Corn futures advanced yesterday as they're supported by a 6 to 15-day forecast, which calls for hot and dry temperatures in at least 40% of the Midwestern portion of the United States. Traders are also keeping a close eye on what appears to be dwindling stocks of corn. In the May demand and supply report, the 21-22 ending stocks were projected to be 1,507,000,000 bushels. We're going to get the June report on Thursday, and traders are expecting that the projected stocks will drop to 1,423,000,000. Soybeans gained nearly 20 cents yesterday after trading nearly 40 cents higher at one point in the day. The bean market was driven by concerns over the dry weather and strong soybean oil market. It's interesting to note that with yesterday's close, soybean oil's share of the soybean oil-soybean meal spread trade hit 48%. The all-time record was back in 1974 when oil accounted for 59.7% of the spread. Of course, in 1974, we didn't have the government creating a demand base like they are with renewable diesel this year, so I wouldn't be surprised if we set a new record yet this year for the percentage of contribution that comes from soybean oil in that spread. Wheat was a mixed bag, with winter wheat futures in Chicago and Kansas City a bit stronger, while Minneapolis sold off after receiving a wetter 5-day forecast for the Upper Plains and the Canadian spring wheat region. Now, as I noted in yesterday's broadcast, the spring wheat crop is currently rated at 38% good to excellent, and that makes it the second worst rated crop on this date since crop ratings have occurred. The last time that we had a crop rated this low was in 1988, but the expectation is that widespread rains will reverse the current reality and lead to a better crop. Cotton futures had a good session yesterday, with both the old and new crop futures closing higher. At the close, December futures were up 73 points, closing at 85.99. Livestock futures were mixed. At the close, we had August live cattle 5 cents higher, while August feeder cattle were down 95 cents at the close. Lean hog futures gave up a bit of ground as well, with the July futures finishing 30 cents lower for the day. Class 3 milk futures continued to move lower. Yesterday saw the June futures finishing 16 points lower, settling at 17.46. And meat cutout values were mixed. Choice box beef was a penny higher, closing at $338.61. Select boxes were down $2.99 as they settled at $306.18. The pork carcass cutout values were stronger, finishing 21 cents better as they ended the session at $134.94 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.